financial year results for 2016 and 17, and today our board has adopted it in the meeting held in the morning, and we are here to brief you about the progress made by the bank during last financial year. You are all pretty aware that Punjab National Bank is the Swadeshi bank which came out of the existence of Swadeshi movement, and the Lala Lajpat Rai is the founder of the bank. Having 122 years of existence, a consistent record of growth and profitability, we are the second largest lender of the country in public space. I would like to place before you our major highlights. Our higher operating profit stood at 14,565 crore. Our gross NPA levels and net NPA levels have gone down below last financial year level as well as below December 16 level. You will be glad to know that our provision coverage ratio has gone up from 51.06% to 58.57%, indicating the greater compliance to our safety standards. We have a stable asset quality in large credit portfolio, a sustained cash recovery and upgradation, and sustained high growth. We have got a network of 17,618 branches and the ATM. Our share in CASA, the CASA share is 46%. Our sustainable operating profit is 14,565, and a consistent and strong cash recovery of 10,677 crore. You will be glad to know that we have substantially increased our electronic transactions. Transactions through our alternative delivery channel has gone up by 54% during this year. This quarter, preceding quarter, was a year of remonetization. It's a quarter of remonetization. After demonetization, when the cash started coming back into the operations, that has given a new economic activities. Normal currency is now being replaced by the e-currency, and digitalization is progressing. The last monetary policy announced by Reserve Bank of India has given a greater focus on the inflation, which will pave a path for growth in credit. The union budget presented by the Government of India is basically oriented in rural and semi-urban areas. Rural housing and affordable housing has been given a lot of concessions and preferences. Fortunately, our PNB has got 61% presence in rural and semi-urban areas, and we have a large potential to grow in these segments. As regards liquidity, there has been a change in liquidity because of the demonetization. A lot of money which was into the economy has come into the banking system. Now the securities yield has gone down, and consequently all the lenders will look for greater avenues for lending to the economy, which will boost the credit growth of our bank in general and economy in particular. The recent resolutions by the Government of India by amendment in SARFAESI Act, formation of bankruptcy code and its implementation and NCLTs, they are going to be enabler for the banking system to resolve the stress asset issues. Coming to the business, well, our global business has grown by 7.9%. Our domestic business has grown by 9.6%. Our gross advances have grown by 2.1%. And the best comforting factor is our CASA growth, which has grown by 26.5%, out of which saving bank deposit has grown by 26.4%. This is a phenomenal growth and contributes to the profitability of the bank also. As regards daily average basis, I would like to inform you that it's not the performance on a year-end basis. On a consistent daily basis, bank has done good. Our growth in global business on a daily average basis is also 7%. Domestic business is 7.6%. And even gross advances, it is 5%, which is better than even the terminal figures. The next is the presentation in the bar graph. The bar graph itself will indicate the consistent growth in CASA and terminal level as well as in the daily averages basis. And you will find daily averages have grown more consistently than the year-end figures. If you look at the business performance in deposits, our global deposits have grown by 12.4%. Domestic deposits have grown by 14.5%. CASA has grown by 26.5%, equally divided among current and saving, 26.8 and 26.4. You will be observing that there is a decline in differential rate of deposit, that is the high cost deposit, bulk deposit. Bank has gone a reblending of its deposit portfolio by shedding the bulk deposit and growing in retail and CASA. As regards steady and qualitative fresh build-up, our strategies are capitalizing on vast rural and semi-urban network. Normal monsoon is anticipated by meteorological department. Good crops are expected and better rural income will be generated. Government has already come out with the housing schemes. We can capitalize on that and grow in the rural and semi-urban area where we have existing strength. As regards small ticket advances, we have a large branch network. We will be acquiring market share, concentrating on retail, MSME and agriculture. We are also exploring the possibility of tie-up of the payment bank. Our endeavor with the Indian Post Payment Bank is at a higher level. We may end up selling our retail credit product along with their liability product, deposit product of the new generation payment banks. As regards fresh credit linkages, we are leveraging our technology to integrate financial inclusion and, as already said, through India Post Payment Bank customers. For large corporate, we are going to target mainly the quality segment, where we can reduce our risk-weighted assets. We will be targeting AA-rated, AAA-rated accounts. We will proactively go and market in these segments. We will strengthen our existing JLF mechanism. Wherever we are the leader, we will be proactive. Wherever we are the member, we will definitely fall in line with the RBI directives so that quick resolution of the stressed assets can take place. As regards credit, we have grown by 2.1% on global basis. Our growth and domestically was better, it was 3.1%. And the major indicator is we have grown by 14.2% in retail loans. It is basically a process. Last year we adopted a process of reblending of our credit portfolio. While de-accelerating our growth in corporate sector, we have given more focus on retail and MSE sector, and which is evident from the data available to you. If you see the share of advances below 5 crore, you will be glad to know that strategy has given good yield. Its proportion has grown up from 35.9% to 39.6%. Our bank has achieved all the major national goals. As against stipulated target of 40%, we have achieved 40.52% in priority sector. In agriculture, against 80% stipulation, we have achieved 18.66%. The regulatory requirement of 8% for small and marginal farmer has been exceeded by 8.96%. As regards micro enterprise account, our YOY growth as against 10% has been phenomenal, 19.38%. Credit to micro enterprises as a percentage of ANBC was 8.79% as against 7.5% stipulated by the Government of India. If you look at the sectoral classification of advances, you will be pleased to observe that we have grown in housing from 47% share last year to 48% this year. We have grown in mortgages from 14% to 17% this year. All these type of loans, although in retail, offers us good collateral backing, because primary or collateral backing, because we have underlying fixed assets with them, which improves the shift in reblending and strengthening of our credit portfolio. Advances to industry is not much of a thing. We have grown well in chemical and chemical products. We have grown well in infrastructure. If you see the details of infrastructure, among infrastructure, we have grown by 7.4%. In case of power, it is 2.1%. It is mainly because of the Uday scheme that part of our credit was moved to our investment category. Then telecommunication has grown by 24%, roads and port has grown by 7%, and others have grown by 16.4%. The most crucial for any commercial organization is profit. You will be glad to know that our bank is consistently growing in operating profit. Our cost of deposit has reduced from 5.85 to 5.33. Our fee-based income has grown by 17.8%. And interest income, there is a directional change in deployment of funds from low yield investment to credit, which will definitely increase our yield on advances and investment, and interest income will go up. If you have the tabular presentation of profit here, you will be pleased to observe that there is a good improvement in the profitability parameters of the bank. If you see the bar graph next to it, the operating profits have gone from 10,614 crore as on March 12 to 14,565 crore in March 17. A consistent growth and a steep growth during this financial year. If you see the operating income, I think next slide. Vineet, please stay in touch. As regard operating income, we have grown from 17,617 to 23,945. If you see the provisions, as I already told you in the beginning, from 51 to 58 we have grown, and the provisioning is towards NPA. If you see, the provisioning requirement has gone down this year as compared to the last year, mainly because fresh delinquencies were less, almost half of the last year. The provisions for standard assets were unlocked, mainly because of our good performance in upgradation of the restructured portfolios into normal standard portfolio. There was some depreciation in investment, it's a minor amount. Which one? This one? Okay, please. So, this is provisions. Provisions towards NPA. During financial year 16, it was 17,591 crore. Last year, our delinquency levels were to the extent of 40,000 crore. This year, our delinquency levels have come down to 22,000 crore. So, the provisioning requirement has gone down. Earlier, it was 17,591 crore. This has come down to 12,704 crore during this financial year. As regards standard advances, including standard restructured advances, our provisioning has gone down, mainly because of the upgradation of few of the restructured account into a normal standard category after completion of 1 year. Next. If you see the breakup of net interest income, our net interest income has not grown much, mainly because of the two factors. One was that because of the transmission of policy rates, from base rate we have migrated to the MCLR, thereby reducing the cost of our rate of interest on credit, and that has reduced our interest income. Our interest on investment has grown up marginally because of the higher level of investments. Our other interest income has grown up, and the total interest paid is almost in the same range. It has not grown up much, although the deposits have grown up. As you have seen in the earlier slide, the deposits have grown substantially, but our interest paid has not grown, mainly because of the reduction in our cost of deposits. So net interest income, although it has come down because of the transmission of the policy rates. If you look at the fee-based income, we have grown almost in every area. If you look at the slides, everywhere the growth is in two-digit, barring one or two sector. Processing fees grown by 27%, the incidental charges by 34%, from ATM operation 24%, and by government business 43%, by exchange profit 36%. So almost in each vertical, barring one or two, we have grown in fee-based income. If you see the cost and yield ratios, our cost to deposit ratio has come down from 5.85 to 5.33%. Our cost of fund has come down from 4.93% to 4.60%. Our yield on advances has also come down from 9.10 to 8.29%. And the obvious reasons I have already explained were two. One is transmission of policy rate, another is because of the NPA portfolio. If you see the net interest margin, in the net interest margin, our domestic business net interest margin has come down in domestic from 2.95 to 2.69 and global 2.6 to 2.38. Come to the next, the profitability ratios. Last year our return over assets was negative. This year we are positive, and we have shown a return over assets as 0.19%. Our return on net worth was negative because we are in loss in the last financial year. This year we are come out with profit, so its return on net worth is 3.52%. Operating profit to AWF is 1.74 last year, which has gone to 2.08. Cost to income ratio is 46.79 to 41.57%. If you see the establishment expenses to total expenses, it has come down from 15.27% to 12.36%. Our book value per share has marginally gone down, mainly because of the incremental infusion of capital by the government. Our earning per share, which was negative last year, has grown to 6.45 this year. If you come down to the treasury operations, you'll observe that treasury operations have given good yield, and we have grown from 1,58,807 portfolio to 1,88,138 portfolio. So our investments have grown up because of the available liquidity with us.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.